Good morning, everyone. Hello, Trade Pros. Hello, everyone. Welcome to YouTube. This is a morning market update. And today we got a decent bit of things to talk about. We still have a lot of news that's coming up in the market. We have a full calendar that's coming up. We remain cautious. Investors, traders, everyone remains cautious. This morning we had two key events, and this just continues throughout the day. So, a slew of economic data that's due later in the week as well. And today we have the Q3 GDP estimates, the ADP report on private sector's payroll, and we also have consumer confidence index that slipped further in November amid rising food and gas prices. So just talk about a little about this ADP and the GDP numbers, right? The ADP, the employment changes, right? 127,000 versus 200,000, as were expected. The 200K, we had a larger miss on the 127K added, which was um, a slight bullish reaction in the market. And that was just 15 minutes before the GDP numbers, right? Why was it a slight bullish reaction, even though we missed? Because this does give a sense of a slower roll in the economic presence of the jobs numbers. We do have those jobs numbers coming out on Friday as well. And that would a weaker economic number pretty much means that these rate hikes are going to be subdued a little more, right? That's what the market expectations are. Now come in the GDP, right? The quarter over quarter, the second estimates for Q3, 2.9% versus 2.8% expected. So a slight beat there with growing economic conditions and somewhat of a growing GDP here, with the US core PCE prices at 4.6% versus 4.5, and as well as the US GDP deflator, 4.3% versus 4.1%. So this caused a decent bit of downside in the market, right? One of the main reasons, as we might anticipate, is that we have a strong enough economy to withstand the increased rate hikes that will continue this cycle, along with quantitative tightening to continue. So the fact that this market is sustaining this, right, and can actually sustain, I guess, more rate hikes is one of the reasons why we did drop a little lower here pre-market after that Q3 GDP second estimate came out. Also, we have the personal consumption expenditures price index, the Fed's favorite inflational gauge, will be released tomorrow, while the highly anticipated employment claim, like we talked about, the non-farms are going to be published on Friday. We also have Fed Chair Jerome Powell that is slated today to make some remarks at 1:30 p.m. Eastern at the Brookings Institution, and we'll touch on the economic outlook, inflation, and the labor market. So these are very, very good categories in terms of market anticipation and movement. So a lot of people are going to be watching these things, meaning that the morning might be a little subdued in terms of price action and movement, right? So take that into consideration as Jerome Powell comes out at 1:30. Also, the beige book that is set out at 2 p.m., right? This is going to be Jerome Powell's last chance to convey the thinking of the central bank before entering the blackout period ahead of the FOMC's meeting on December 13th to 14th. So, besides some hawkish comments, several other recent catalysts have the ability to weigh on major averages. So, there's the OPEC Plus meeting coming this weekend. We also have protests that are escalating in China over the COVID-19 lockdowns, and that remains and that remains with continued instability in the cryptocurrency market as well. So there's a few other things to talk about other than these events that we anticipate, right? It is harder to say, will Jerome Powell this afternoon drop the market or help it rally a bit? We'll see what his outlook is on that. We have the inflation number that's coming out fairly soon as well. We also have railroads to talk about. We also have non-farms. We also have Musk versus Cook. That's one of the main topics today, right? Elon Musk is going on a tirade continuously, right? And now wage war on Apple. So why is this important? Because Apple is one of the largest constituents that can move this market, right? A weaker Apple, and it's been dropping fairly aggressively, right? From news out of China to now, what's going on with Elon Musk can sway the overall market lower. So Elon continues to goad Apple by publishing the results of a poll, which he asked his 120 million Twitter followers if the world's most valuable company should publish all censorship actions it has taken to affect its customers, right? The vote was resoundingly in the affirmative. Nearly 85% of the 2.2 million correspondents said yes to the query. Never one to miss a chance to savor a win, right? Musk also followed up by tweeting, "The people have spoken." In terms of the bigger picture, right, the poll was the latest in a series of pokes and prods that Elon began making towards Apple over the weekend. Right, he called out Silicon Valley's biggest name, which controlled apps and their distribution on every phone for what he claimed was the deep cutting of its advertising on Twitter. So Musk also accused Apple of threatening to pull Twitter from the App Store, as well as CEO Tim Cook for clarifying his company's movements and justify the 30% cut that it takes on digital app sales. So we did see, what was it? It'll come to me, but something along those lines. Apple has mostly stopped advertising on Twitter, right? It was, I believe, week to week. It was what 130,000 most recently. Before that, about $200,000 on a week to week basis in terms of just advertising money from Apple, and it stopped advertising on Twitter. And do they hate free speech in America? This is what Elon Musk actually tweeted, suggesting that he was quote unquote going to war. I certainly hope it does not come to that. But yes, if there is no other choice, I will make an alternative phone separately. So Morgan Stanley analyst Adam Jones also weighed on the matter and said that Elon Musk's activity since he acquired Twitter for $44 billion has led to growth and negative sentiment about his main business venture, Tesla, right? We've seen Tesla get beat up day after day. Right now, it's sustaining some kind of strength, but overall has been dropping. This is going to be important. We're going to see how Apple kind of reacts to all this news and what comes of this, where it goes, and also coming into the earnings period, coming into the next few quarters is going to be very, very important as well. To kind of gravitate towards something that we talked about yesterday, right, in terms of the railroad strike, heading off into a nationwide strike for railroad workers. House lawmakers say will take up legislation to avert the work stoppage and prevent damage to the economy. So Senate Major Leader Chuck Schumer said at the press conference that he and the Senate Minority Leader Mitch McConnell would also agree to push for the bill's quick passage. The Railway Labor Act empowers Congress to require rail companies and unions to accept labor agreements rejected by their members, though lawmakers can order both sides to push back a strike deadline or refer the negotiations to arbitration. So, I see some quotes. Nancy Pelosi also said, I don't like going against the ability of unions to strike, but weighing the equities, we must avoid the strike, right? So, naturally, Nancy Pelosi, we've seen some controversial opinions out of her, especially her movement within the stock market. After she said this after a meeting with President Biden, the leaders from both parties at the White House, jobs will be lost, even union jobs will be lost, and product will not be going to market, right? Which is going to cause an inflationary effect that will propel Jerome Powell maybe to act a little more aggressively in the coming weeks. So one of the top industries to watch has been the chemical sector, which is one of the biggest users of freight rail, according to America's Chemistry Council. The group ships more than 33,000 carloads a week, valued at $2.8 billion, and any work stoppage could lead to a recession in this. So, to prepare for a shutdown, railroads even stopped accepting security-sensitive shipments, such as chemicals to treat drinking water. So, this is something that we do have to consider coming forward. How this kind of affects and what really happens is one of the main news things to watch out for, because a stoppage rate could lead to a huge um, effect on the overall economy and how things work, and can naturally affect the market. So with that being said, right, today we do have a plethora of news coming into the beginning of the day. I would suggest being a little more cautious on what goes on in this market, right, in anticipation of Jerome Powell coming in at 1:30, talking about main events, economy's outlook, inflation, and much more. So it's going to be the last time he speaks before we see that FOMC mid-December, as I mentioned. So be very, very cautious today. In terms of areas and levels on the S&P 500, we managed to hold out the 39.78 to 80 numerous times overnight and yesterday. That presented us with this pullback and downside move, and we did drop all the way down into a key level that we had mentioned yesterday as well, going to be the 39.58 to 60 right now, trading about 65. So a decent bounce from that area. Those are two main areas that I do want to consider coming into this morning session right before Jerome Powell talks, and I'll leave you with that as we get ready for Thursday and Friday non-farm payrolls, and also tomorrow we do have some data coming out. So with that being said, keep those thoughts in mind, and we will be back and coming into a pretty interesting holiday seasonality, and we'll see how that shapes up. Usually we talk about Santa Claus rallies, but we'll see how that bodes this year around with all of this downward pressure on the stock market and the economy. So thank you guys for watching, and we'll see you tomorrow.